What's going on, guys? Welcome in smarthelping.com live financial modeling. It's Friday. Happy Friday. Let's go. Hope everyone's going to have a great weekend. Today, I plan on finishing up this model for the website or app subscription startup model. And this is the second SaaS model I've ever built. As you know, we are on a mission to integrate a formal cap table and three statement model into all the startup models that have been done. And it's going to be a long journey because there's a lot to do. Don't forget to like, subscribe to the channel. Free ways to support me. Also, probably more importantly, check out smarthelping.com. We've got over 100 templates for all kinds of uses, not just startup models. That's just what we're focusing on right now because we got to update about 60 templates. It's going to take us 6 months or so of doing this live stream to do that. But there's other things: joint venture distribution, cash flow waterfalls, industry specific is what we're updating, accounting tools, real estate, a lot of things to help your organization, tracking customers in the pipeline, KPI dashboard, general business tools, human resource management, valuation, and some personal finance stuff. You can get these in bundles. You can also do bundles by level. You can see there's levels of each model, and you can see the schedules here to buy. So, and remember, with any purchase, you do get the pitch deck ready financial visuals and a general three statement model, which is what I'm using to do all these integrations for free. Or if you purchase one or the other, you can get another $45 template for free. Before I get, well, no, I don't have my phone. Hopefully the sound is there. Didn't seem like anything was wrong with it, so hopefully we got sound. Let's see, actually, can I check it here? The model today's we're real close to being done. We just got to do distributions, executive summary. Ooh, we actually need a different template for the executive summary. Let's get pull this one from this the SaaS model we did earlier, well, last week. So far in the integrations, I've done 3, which is the franchisor licensing, the basic SaaS startup model, and equipment rental. Here we go. That's better. Actually, we'll have some of the similar KPIs. I'll bring that in too. So today we're just going to update or build in the executive summary, distributions, and then we're going to do all our sanity checks, and then we'll start testing different scenarios to make sure nothing breaks, and that'll be it. And so it took me almost all week to do this model, which is fine. Monday was really an update on the integration template itself, and then Tuesday through Friday we've been working on this. I didn't stream. Did I stream every day? I think no, I did take one day off. So we had 4 streams this week. All right, let me check. Let's make sure we got sound. Test. We got sound. Yep, that sounds good. And then here, so if I could see if anybody says anything. Okay. So let's start real quick. We'll start on the distributions. So here we're just summing up anything In the cash flow monthly row, that's a positive value. And if the date matches, so if this is greater than 0 and where's our year 2? I go kind of fast today, as fast as I can. One thing that's good when you're doing these kind of integrations is we'll do a find and replace and search for .xls on the entire sheet, and that will tell me if I have any formulas that are referencing a different workbook, which obviously we'd have to fix. Now less than 0 on this one. And here we'll get remaining equity, which is just going to be, so in this case, it is cash flow for the period, which period 0, plus this. Make sure that's right. And we'll have checks to make sure all this matches up, but I'd like to get it right on the first try. Oh, actually, this is the number I need. C350. Because it's saying our startup costs are minus 130. We're doing 100,000 financing, so we're going to have to use some of the equity that we raised to cover this other 30,000. Yeah, so 350, not 333. Okay, and then you can see this is a really nice waterfall that I built. I built this, just customized it to make it so you can have any combination of positive and negative cash flows, and it will make sense based on raising equity in year 0 and then having positive or negative cash flows over time. And it'll use the equity remaining before it says you need to have any contributions down here. Which, if this cash flow is negative, it would just mean you need to have another contribution. Otherwise, it's going to offset any negative ones with the positive cash flows, and uh, and if there's no equity remaining, then it comes down to a contribution, but then that still offsets against your total cash in. So before you offset this, it checks to see essentially if there's any equity to use. So here, in this case, we've used it all in year 1. Year 2, based on whatever assumptions I put in there, which are arbitrary, we have minus 5,000, but there's still $4,000 worth of equity remaining from this initial 5,309,000. So we only have to use 856,000 of offset that against the positive cash flows to get this net number here. And here again, we don't have any equity left here, so this full 284 is offset against our positive 62 million. And that's just the only reason this is negative in year 5 is taxes. And again, we will check this against our other monthly cash flows to make sure everything is lining up. And actually, we still need to update this. So this is going to equal total equity. And then this is the initial outlay, so we can do our discounted cash flow analysis. And then we have an internal rate of return of the project, which is just this. Discounted cash flows, or discounting the future cash inflows to get a net present value, which is just measured against the initial investment and the positive cash returns. Then you have investor cash flow down here. And that internal rate of return, which we need to update. So this is going to be cap table, and then insiders, total not fully diluted share of profit. And then owners get anything that's left. And then the internal rate of return is calculated based on the cash flows for investors. Oh, and we need to update this to contribution for investors. It's going to be this total here. And insiders, which could be the startup founders, operators, are also potentially could put in money, and then their shares is entered as well. Usually the operators will put in less than the investors, obviously, but they do all the work to, build a business and run it. Okay, so this looks good. Just making sure we don't have any other references to any other workbooks. So there's our contribution distribution summary, all done. Now let's go to the executive summary. And so here I actually do want to put in each revenue stream of the different pricing tiers. There's 5 tiers. So MMR, monthly recurring revenue, tier 1 through 5. 1, 2, 3, 4, 5. And that should be on the annual summary here. Tier 1, ARR. Tier 2. And 3. And 4. Really, this is a run rate, tier 5. And sum all this up. So this is actually, I'm gonna call this revenue per tier, tier 1 through 5. And we'll group these if you don't want to show them all, just kind of want a screenshot of just the high level items. So there's that, and this gives a nice snapshot of operations. Oh, update the date as well. Let's keep that format. Okay, we got total revenue, cost of goods sold. Right here. And then, so there's our gross profit and gross profit margin. Then we have our high level expenses. So general and administrative right there. Sales and marketing. Oop. R&D. And I'm going to put in also a percentage of revenue for each of these. And we'll format this. So on each of these, we want to do percentage of revenue. Take this divided by C9. And we can make it italicized, make the font down to 9, format it as a percentage. And then now that we have that locked, we can just copy paste it all the way down through here. All right, we got revenue per tier down to EBITDA. Let's make sure this matches 3,176. No, 37,560. What are we missing? EBITDA 37 million, and we're getting what? A lot less. Oh, hold on. Let me make sure I pulled the right number here for tier 1. Nah. Okay. So this is doing the recurring revenue at the end of the year. Oh wait, no. Which that's fine. Net added revenue, total added revenue. So this is the right number to pull. Our sum formula missed the tier 1 through 3. They had to be it. Okay. And that's why you always do checks. Make sure. So 36,912. So we're missing something here. Maybe 36,912. And then what are we at? $37,560. So we're missing something here. Let's check gross profit. 40,021. Yep, that matches. So it's something with our costs, our fixed costs that are throwing us off. So let's see, what could we possibly be missing? So this is taking total revenue minus all the costs, which is cost of all we did variable and fixed. Now, did we not include one of these, maybe? Let's see, cost of goods sold. This just sums up everything that's has the term cost of goods sold in it over here. So that looks fine. Oh, here it is. So some of the, oh no, I don't think this is it. This is just a labeling thing. So this is total cost of goods sold. And then these are like customer service reps. That's fine. That should, these are all cost of goods sold, and I did not include an R&D. We're out by about $1 million. Hmm. Well, we can go check. We can check our G&A 1356. Okay, this is only 708. D226. Let's see what happened there. You have D220. Oh, I never dragged it over. Did I drag any of these over? Yeah. How did I just didn't drag the G&A over? Well, that was a simple problem. 37,560. I think that's the number. 37,560,000. Yep. Okay, so that matches. So we're good up to EBITDA on the executive summary. Now we've got some other cash flow items. So startup costs. And we're representing that as a positive value here. Exit. Is this one? Debt service. CapEx. And it's nice once you have everything summarized nicely and neat, you can easily reference things. What am I on CapEx? We're representing all these as positive values. I want to subtract them in the formula. Also want to format this down here. And then building proceeds. If you sell the building or if you bought one and need to or show sale of that at the exit, if there is an exit. Oh, remember yesterday was huge trying to do the doing the selector for yes, no on terminal value. That was really good. And this is actually all fixed assets. Financing, we're just showing this in year one. So this would be anything here, or if it happened here, and then year two. Okay. We have pre-tax cash flow. We did do a tax calculation. All right, that's good. And then we'll do these KPIs in a second. I just want to make sure. Or see if we have a check on the executive summary. Okay, yes we do. Okay, good. So I'll do that after this. Average monthly recurring revenue. Well, let's see. What KPIs did we do in this one? We did three main ones. Customer acquisition cost, gross profit per user, customer acquisition cost, payback. Okay, sounds good. And then I don't think I did any others. Let me check the monthly. Oh, no. Okay. So we did lifetime value on the monthly. So we're going to use this on the executive summary, but we'll just do the averages per year. So this is going to be average ifs. And then we'll go to the monthly. Average here. If this is greater than, well, no. So it looks like if it's not counted, it should just not, as long as it's not blank, count it, and then also average it if it matches the year. I'll have to put year numbers up here. All right, I'm really excited to get this done, updated, do an overview video. I'm not changing the price on it. This one is actually $125. And so all these models are startup models are getting upgraded. No change to price, just more value for the user. And I'm not changing any of the base logic. All right, average customer acquisition cost. We just put all these into numbers first. So this will be a function of your assumptions. Now, why do we have no gross profit per user in or any of these? Hold on. Oh, whoops. We got to lock. We got to lock row 2, and we got to lock C1. Try this again. And there we go. All right, gross profit per user per month average. CAC payback in months average. And customer lifetime value average. Okay, that's good. So gross profit, all these are dollar values except for the payback in months calculation. Looking good. I'll just do a quick check here. So ending cash flow is 62,633. 62,633. That's right. And then the difference of that and that is just the um, equity, which is fine. We're not showing investment here. Now we could. Do we want to? Nah. This is really just focused on the business operations. So we know this negative number is about the total equity that's going to be required, or roughly the amount minus any or against the prop or EBITDA. All right. So that's Great. This executive summary is a lot better than the one that was on here. Distribution summary is a lot better than the one that was on here. And visuals are fine. Nothing's broken on the main model. So now let's put in all our sanity checks, and then we're going to be all done with this. So annual net income versus monthly. Annual net income versus monthly. So that's a check here. Oh, and then after these checks are all done, I'm going to format and clean up all the spacing on the three statement part of this model. So net income annual, we want to make sure sum of all of this minus sum of income statement is all matched up to 0. Okay, that's the first one. What's the second one? And then I'll reference that. I'll reference these later. Balance sheet monthly. So this is just a check on the whole balance sheet. And then balance sheet annual. Because the balance sheet's one of the main things you go to make sure things are balanced. So that has a built-in check that's common. So we're just going to sum that up. If anything's off, it'll show up there. Annual detail check against monthly. So that one I think we have in, so we just reference it already. Annual check. Yeah, that's checking the cash flow here. Making sure that's 0. And then annual detail check against balance sheet cash flow. So this would be, let me go to balance sheet real quick. I need to always make sure if you end the model earlier than the last month. I need to be able to pull this cash balance. So I believe we just take the ending cash balance on the balance sheet, index that. If we match the exit year with the year. And so that's the one side of it. Oh. What did I miss? 0? Well, this is one thing I like Google Sheets. It'll tell you more of what's going on if you have an error in the formula. So I think the problem is the year doesn't, that's formatted, this is formatted in year, and that is formatted as actual date. So we could, let's see, what's the easiest way? We can just do this. Year of C5. Make that a little bit lighter. and then we'll just index 4 instead of 5. And then that number has got to be checked against so we're going to check 4. Okay, we got a value, and then check that against our annual ending cash balance. And then I think we're still going to be out by the equity. Yep, so then that will always match to 0 against the equity raised here, or required. There we go. Okay, executive summary to annual detail. So this one, executive summary to annual detail, we do sum of this minus this number, because we're doing before, oh, nope, let's try 249. Yep, so that does include equity. So this check is saying, here's all the cash flows I have from operations. Here's the balance at the end, which would be 68,537. If you go here, 68,537, which is the sum of all this. And there's no equity in this cash flow, so that's why those should match, and they do. Let's keep going. Well, I might as well reference that while I'm here. So this is going to be this. Distributions to annual ending cash flow. So here, this is a check on distributions. Sum up all of the, let's see. I believe just that. Let's check. Okay, and that's also going to be against equity. Okay, good. And then individual distributions. Okay, so this is one we have to build still. I forgot about this. Cap table. So here's each entity's investment and then their distribution based on their fully diluted ownership against the distributions available. And we're only 5 years on this model. 1, 2, 3, 4, 5. So we don't need these. Might clear all. Oh, merge cell. Can't clear that. 1, 2, 3, 4, 5. Delete this. Okay, got these all automatically updated to the new range. Awesome. And then we just reference. So now we're going to go distribution C9, which is the total cash flow available to distribute. And I should be able to just drag this over and down. Same with the owners. And then this will be, again, it's fully diluted ownership value. So we're going off the total distributions available to the project. Make these 14. Alrighty, and then checks down here. This is checking the total defined individually against the total in distribution C9, so that should always be 0. And then this is checking against the distribution specifically going to insiders and outside investments. So what we're doing here is just making sure the numbers we put for each individual here add up to this, and then for investors this in here. So lots of checks going on, all important, all necessary. All right, this is done, and then what's our check for that? Individual checks. So this we can literally just sum up the entire check table. Any discrepancies will pop in, and then here we already did this. So annual net income versus monthly. Did it right here. Just reference that. And balance sheet. Oh, we already did these. Okay. Well, let's get this reference here. Investor proceeds is going to be based on the cap table entry. Right there. Share available is fully diluted ownership. And again, if there's not going to be outside investors, or it's just owners, then you could just zero out that. Let's drag these up. Debt versus equity. Okay, this looks good. Now, the moment of truth. We start to play with the assumptions here and see first. Let's switch the year. Okay, we already have some. Oh, because these need to now be, so we'd have to update this to 2023. As well as this. What else is messed up? Looks like an equity thing. Yeah, so it's not polling. It's not an equity issue. It's just not polling. Let's go to monthly. Why doesn't it like that for some reason? No, wait. This is fine. Why is this? Okay, that's fine. Div error on taxes. Which, since we moved up a year, it ends a year earlier because we didn't update the exit months, but that should be fine. So I guess it's just we got to update the div error. So if error, just go to 0. I'm assuming that was the cause, but it might not have been. Let's see. And this is, I like to call this polishing. We are just polishing up everything, making sure it works smooth. Okay, yeah, that was it. So now we've got all our numbers. We have some check issues, okay. Let's see. I'm assuming, so this is where things get real interesting because um, we don't know. It's probably the annual, I'm guessing. Oh, but it's not for the exit. It's right at the beginning. I'm assuming it's something with a date. 5, that looks like the initial investment requirement. So why are we out 5? Why are we at that initial investment? Oh, this is saying only 320,000. Let's think. We update the debt schedule, so this obviously would start in 2023, not 2022, which would be a natural update. Let's go to our monthly P&L cash flow. We're missing, I know, the building purchase. So obviously, if we updated the date of the start month, you'd have to go in here and update all of this. So obviously, you're not buying the building a year before the business starts. It has to be at least on the first month. And then all of this. Also would not be happening before 2023. So those are just natural inputs that logically, if you moved the year up one, you'd have to update all of that. All right, let's see. Does that? We're still out. Executive summary to annual detail, 26 million. Okay, interesting. I'm assuming this is because annual penal H39 is. Are we going to 0 on this? Yeah. Okay, this is why. So. Oh wait, no. This is picking up the right 33,860. Oh, that's not the check. Annual P&L H349. So this number 33,860 against all of this. Well, let's go to the period, see where. So period 1 minus 5.2, 259. That's off by a little, but not that much. Then 763.35. 763. Okay, so this looks like we're missing. Yeah, we're missing a sum of exit. And actually, let me just I'm just going to do this. Redo this so I make sure we're matched up with the rows. Minus startup costs plus exit value minus debt service minus capex plus sale of fixed assets plus fund of financing. And that was it. Perfect. Love these checks are so great. Div error here is fine. That's just not because the year doesn't exist. Only going to 2026 with with the current assumptions. I feel like I'm just taking a scrub brush and just cleaning up. Love catching those things. Here I'm just getting everything to the top. I'll have to format the 3 statement model, so that's fine. Okay. We're 0 there. Let's check some more things. So let's see, what if we make the end month back to the final year? Another error on the executive summary. 54 million. So that's the exact amount of this exit. So this 83. Ah, I see. Okay. So I don't know why this formula. Oh, I know, because I pulled this from the SAS model, which automatically assumes the exit month is only in the final year. So that's why all of that is there. Now going forward, um, well, let's just see. Okay, let's see. So now all zeros, that's good. We'll check it again, make sure, like, what if we ended a year earlier in 2026? All zeros. What if we do like a partial end year? All zeros. What if we do a partial end year in the last year? All zeros. Yes, okay. So we got all zeros, that's perfect. Now let's do it assuming we are not including a terminal value. This is, okay, first error right there. Balance sheet. So we're on the last month of the template, and it looks like we're out by the exit value, or yeah, let's just go in there and see. So 5,182,000 appears to be 5,182,500. What is that? Looks familiar. Let's go to the monthly and see if that's off. The monthly might not be. Yeah, the monthly is not off because so it's an issue with the granularity of going from monthly to annual. Is this the, what is this? 5,182,000. I think I know. No, it's not this. So assuming there's no exit, this would have to be 0. So you would go in here, but I don't. Let's go to the balance sheet. No, that didn't affect anything because the yes no logic was already looking at that and not counting it if it was in or out. So that's good. So you don't have to worry about that anymore. If you choose not to do an exit and you have a value here, that will not mess anything up. However, we are out by a bit. What is that number? It's an even 5,182,000 even. I feel like I've seen it before too. Go to the cash flow statement. Looking for 5,182,000. Um, Here we go. It's the value of the non-current assets. So what we're saying here is it's the last month. But see, we only want this to go to 0 if our logic says yes. So we need to update this formula. Let's see if ED11 is. I thought I did. Did I just not drag it? Because all we should have to do is, I updated the monthly, but I did not update the annual one. That's because I remember doing this. So you can see how in the monthly we're saying all this is all we have to check really. If global control CA equals yes. or not. So watch, all we have to do is say literally if, this is so much easier than what I had before. Look at this, I just have to do if this equals yes, then we're zeroing it out. Otherwise, simply sum up everything above. Super simple. Oh, and we gotta check if it's the exit year, so hold on. Because we don't want to, if it's yes, we don't want to zero it out the whole time, just on the exit year. So if and global control CA equals yes, and nice, we put these years in here, and this equals our exit year. Man, this is so much easier than before with the other formula. It's great. Balance sheet C4, sum this. And there we go. Since it was no, marked as no, that should come in there. And then now we're back to zero match. Perfect. Okay. Let's try. So this is saying no. Now let's say partial end month or partial year. Oh, balance sheet. And this appears to be debt service, but let's check this bigger one first. So partial years are always a little bit difficult. Let's check our index formula. It's definitely in the last year. Yep. So we're out. I'm assuming it's because of the accumulated depreciation, because I guarantee the monthly matches. Yeah, the monthly's fine. So August 2027, the accumulated depreciation is 598. So that's what we want to come into here. So let's see. Right now we're just indexing this based on the last month of the year, but we can't do that. So this formula, so this is doing the new logic. That's good. So we just want to figure out, we want to pull this. Wherever it might be in whatever month it might be. So let's think about this. And this is, I mean, it's a really rare case because usually people are going to end on a fiscal year, but if you're not, for whatever reason, I still want this to work. So we're trying to trying to see what's the best formula. I think we just do check if it's the exit year. So if this equals our exit year, then simply index the balance sheet monthly, accumulated depreciation, and then we'll match that against the exit month or the end month. Man, it's so nice separating the end month with if there's an exit or not. That logic is so great. I'm glad I thought of it this soon. Because that would have been miserable trying to figure that out for 60 templates. So this month 0. Otherwise, do the other formula. And then we can drag, let's lock this. And global control C6, lock. Drag ourselves over here. And there we go, 598. And now we're all mashed. Oh, there's 1373. So this looks like a debt service thing. Let's see, 91,811. What's our balance sheet look like? No, that's actually the right amount. So 1373.50. Check the cash flow statement. Ah, 1373.50. So why? Oh, here. Income statement. So interest payments, we need to make sure those stop at the exit month. Let's go into there. Row 69. Man, I love catching these errors. Like doing these checks is so nice. Like I'm really, really getting the model clean before it's done. And it's really just these sanity checks that are helping. Okay, yeah, so this needs logic to stop it if the month is greater than the end month. And then we should be good. All right, let's go back to our global control, see if we're all, so this is all zeroed out. Now, every time we do an update like that, I have to go through and we have to recheck all the different potential scenarios. So um, let's just stick with this for now. So we're on no for no terminal value. Let's go back and assume it's the end month. All zeros. Half partial year. All zeros. End of the 1 year earlier. All zeros. Excellent. Partial year. All zeros. Okay. This is good. Let me put a note here. If you change this, make sure to go and update the start months in all the yellow tabs to match accordingly. Because it's like 2025 and you bought this template and this still says 2023, when you change this, it will update all the potential drop downs. So you need to update that. And it's mainly going to be debt schedule, OPEX, and CapEx. But if you're actually using the model to build a simulation, you would be going through each tab to make sure it all is congruent anyway. So that should be self-explanatory. But I put a note there just for you guys to just help. All right, what was I doing? Okay, we did these checks. So everything seems to be good when you say no for terminal value. Let's recheck it, make sure we didn't break any logic for yes. Oh my goodness. Okay, so this is why we have to do this. So now if we put yes, we do have the year. See, it's not closing out the fixed assets again. Or it is, and it shouldn't be. So if and global control CA equals yes, which is true, and that equals the end year, which should be true. Hold on, 2027, 2027, 2027. So let's go. Now this is one of those conundrums where everything seems so. If global control C8 equals yes, that's true. Did I do G4? Yeah, that's right. Ah, I see. Terminal value D4 needed to be locked. Love catching these errors. Really, really nice. I'm telling you, if you guys are doing financial modeling and you're going to make serious money and get, have a very high rate, you better be accurate, and these checks are going to allow you to do that. Okay, so now, all right, let's go back to no, make sure everything works. So no, okay, so end year, we'll do partial end year, 0. Let's do one full year earlier, zeros, and then let's do a partial year into that. Okay, we're good. Let's go back to the yeses. If we do a terminal value last year, 0, partial, 0, awesome. One full year, 0. Well, we're almost there. 0, nice. Okay, so yes and no both work. Now I also need to make sure there's no logic with this run rate, because I know I had old logic in here that checked the run rate. We don't need to do that anymore now that we have this selector, but yep, see. Okay, so balance sheet monthly. This has got to be something with the capex. 1,321,000. Now let's go over here. And it looks like it's both balance sheet monthly and annual. So 1,321,000 is just in the exit or the last month. So these are being zeroed out. Hold on, did I put a yes here? Yeah, I think this is marked as yes. So, okay. So everything should be clearing out. Let's see what's going on. So this is right, this is right. This is just cash. And that should equal this and this. But it does not. We're up by 1,321. Hmm. Well, this isn't glaringly obvious. Unless you guys think you can figure it out, let me know. But what could it be? So we are in a puzzle here. It doesn't have anything to do with this. It has to do, okay, so it has to do with something with this terminal value being 0, because that's all we changed. Just trying to see. What's global control G8 or C8? Is that our selector? So if that equals a yes, then this is right. Or because we're doing an exit. Now why? Oh, okay. So this is logically doesn't make sense because we're saying we're doing a terminal value, but the terminal value is 0. So this would be something where it doesn't even make sense. Like you would not do a terminal value and then not do a terminal value. If this were the case, you would just put no here. Because by putting 0 in the run rate multiple, you're just saying that, and let's put a little X next to this. You're just saying that at the end month, nothing is being sold, or value is 0. So that would logically not make sense to have this marked as yes and this marked as 0. And what I'm guessing is it has something to do with the is trying to do a net gain or loss, some with the cumulative depreciation, but it's not logically sensible. Like you would never put yes here and 0 here. You might put no and 0, so that's what we also want to check. So let's do all these against no. So let's go back to the end year. Oh, that's fine. Let's go partial end year. Good. And the reason why these timing assumptions are the most important thing to check is because this is what causes the most breakage errors. So if we can make sure it works in any potential logical scenario, well, then we're good to go. All right, I'm going to put this back to yes, put this multiple back to, let's just say 2. Now watch this. So this is the last thing I'm going to do, and then we're done with the model. And I'll have it up and ready uh, to be sold by the weekend for sure. So this is one that I have done sensitivity analysis, and you could define all your base revenue assumptions here. And then I allowed for a sensitivity to be done. So you could say, well, what if my traffic growth rate, I think, is going to be this percentages, but then what if it's, worse? And what that means is each degree difference is a 15% movement from the base. So now look at worst, my exit value went to 15 million instead of at base it's 57 million. If I were to go excellent, so better, it goes to 200 million, and that's just changing the traffic. So I think that's really cool to have the sensitivity here and then the exit value here, because that kind of encompasses a lot of the stuff. It also would impact, I think, remaining equity needed. Let's see. Yeah, it raises it up a little bit. If it was worse, if it's excellent, then it goes down. And you can see conversion. What if my conversions are 15% better? Raises it up a little bit, not a ton. So that's not as an impactful measure as traffic growth. Conversion from free to paid, it's probably not a huge difference here. 3 million in the exit value. Um, churn rate, let's see. So an excellent churn rate means it's really low. Again, not a huge factor there. So I see something. Yeah. These factors relatively move the proportional exit value about the same proportion. And then pricing, that's a bit more. You get about 15 million difference. Or let's see, 57, about almost 20. So you can kind of mess with that right here on the control tab. That's nice. None of that's broken or anything. That's from the original model. If you don't want tax rates, you can zero this out, and no tax implications will pop in there. Make sure that doesn't mess with any of the checks it shouldn't. Let's make sure if we go partial previous year. Man, I'm so pumped that this works now so nicely with the new selector. The logic is simpler. It's easier for you to use as a user. Like adding this little selector here, I feel like improved the model a lot. And it's going to allow me to do these faster. It's just, and that's what I'm looking for as I build these, is looking for efficiencies, looking to improve the value, add value to them. I'm not changing the prices, and we're off here, off to the races. So now the final check. Let me check for any formulas with .xls in the whole workbook. Oop, there are. Okay, good. So first one here, the distribution summary, we needed to update. So that needs to equal the year. All right, let's try again. CapEx. Why I have that referenced, I don't know. That should just be hard code. Okay, and I don't think there's any more. Let me check one more time. Good to go. So we got rid of all those. Super clean sweep of the model. Looking great. Let's just format all of the balance sheet and income statement. So we will remove the extra spacing and put in our groupings. And then once this is done, we'll now have done the basic SaaS model, this more granular SaaS model, which is driven by traffic, the equipment rental model, and franchisor licensing. We'll have 4 full models that have their own 3-statement model and cap table, in addition to everything else that they already had. So this is really cool. So this final formatting doesn't take that long. We'll just group all the extras, or group the rows if you want to roll it up or down. Remove any rows not needed. Get ourselves to the top left. Same deal here. So all these reference errors are just delete. Group this. Group the OPEX. Let me make sure I did it on the income statement. No, I didn't. So this is grouped. So now you can roll up here and see more high-level revenue, cost of goods sold, OPEX, EBITDA, depreciation, net income. Okay, that's good. Let's go to the balance sheet. So that's fine. This should be grouped. This can be deleted. We'll just group the entire section if it's not. Yeah, that's fine. So this actually ungroup here and regroup the entire section. So look at that. If you want to see high level, you can see the whole balance sheet right there. And if you want details, you just open up a section. All right, out of here, I think I only deleted these rows. All right, looking good. Cash flow statement, final one. Let's see, we can delete this, 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 and this. Group them up. Where's our data? And don't forget, guys, go to smarthelping.com for any templates. I've got hundreds. Been working on them for many years. So you delete this and this. Cash dividends, we don't need that. Alrighty. Looking good. Final grouping, and then we're all set on this one. Next week, Monday, we will be starting on the update and integration of the car wash financial model. Okay, everything's top to the left. Looking good. We can lock or freeze this as well as this. And one of the reasons I don't really do like a actual like dashboard is because there's just too much information. And I think it's better to have the clear summaries on the different tabs, or else it's just too much stuff on one page. Like this is the closest thing to the dashboard. It's just the configurator that allows you to see, an exit value, your equity requirement, and then just some ancillary and some checks. I think those are the most important things that you need to see anyway. Alrighty. Just want to check a couple to make sure removing those rows didn't somehow cause any issues. Doesn't look like it. The reason also I try to make the data assumptions as flexible as possible. That's actually a big issue with models is how they do the timing assumptions. And sometimes people do it good, sometimes not. This allows you to really be flexible with that and not have any errors and give it accurate representation. All right. Have a great one, guys. Don't forget to subscribe.